This is CA Mani Chandana, and I welcome you all to HM Commerce Education. Right, so we are studying the Companies Act 2013, and in that we finished with the features of the company, and we started with the topic corporate wealth, the concept of corporate wealth, and in that we are studying lifting of corporate wealth. Right, we finished the first scenario wherein which was that in order to check if the company is the character of the company, whether it is the enemy or a friend, the court lifts the corporate veil, right? That was the first we saw, and the second one we'll do it today, that is to protect the revenue or taxes. The courts may disregard that the company is a separate legal entity different from its members, and it will treat the members as one, okay, and it lift the corporate will, piercing of corporate will, right? So okay, in this particular topic, well, let's discuss a very important case law, that is Dinshaw Maneckjee Petit. Okay, Dinshaw Maneckjee Petit. Okay, let's start. Right, so ma'am, what happened in this particular case? See, let us start. Okay, let me explain it to you first, and then let's get into your books. Okay, we'll read from your book later on. Right, fine. Ma'am, we are very interested, ma'am. Case law, we love case laws. Yes? Okay, fine. What happened now? There is this one person called Dinshaw Maneckjee Petit. What was his name? Dinshaw Maneckjee Petit. Ma'am, who was he? Who was this person? See children, this person was a very big industrialist. He was a entrepreneur and a businessman. Okay, he was basically a businessman. Okay, he used to he had a lot of companies, and he had his own business. He used to earn a lot of income from his normal business, apart from his which formed his regular income. So doing his business, he was earning regular income, and apart from that, he had invested in lot of companies. He had invested in shares of lots of companies, wherein because of which he used to get a lot of dividend, lot of income in the form of dividend and interest. This is basically other income. Okay, his regular income from his usual business also he used to get, and he also used to earn a huge amount of dividend meaning when you invest in the shares of the company when it earns profits, when the company earns profits, it gives those returns to the investors in the form of dividend. Yes, so this person Dinshaw Maneckjee Petit, he he used to earn what? Huge income in the form of dividend and interest. See, normal people, you, me, and all, we don't earn much. Yes or no? We basically see, all income tax. See, even you don't know income tax, you've not read it in detail, but basic, so see, whenever we earn income, whenever it is more than the basic exemption limit, you have to pay a little amount of taxes to the government. This much income taxes, whatever income you earn, some part of it you have to pay to the government. This much income tax. Yes, everyone. So what happened was, usually when you earn too much, when you earn too high, okay, say for example in crores of rupees you are earning. So now there is a concept called surcharge. When you earn a lot of income, you will have to also pay, in addition to the normal taxes, you also have to pay something called surcharge. That is nothing but super taxes. See, I'll just show you a word here. Okay, something called super tax. See, super tax. Now, what is this? This super tax is usually levied levied when the income of a particular individual or an entity is higher than some amount. Okay, you don't want to how much is that, ma'am, what is that, all that you will learn in your income tax classes in your inter and final. But as of now, what you have to know is that when you earn super profits, or super income, you will also have to pay super taxes. This much is clear. This basic understanding, small understanding about income tax. Yes, ma'am. Okay, now in this case, what happened was Mr. Dinshaw Maneckjee Petit, he used to earn normal income also. He also used to earn what? Dividend and interest income also. Now, this person had to pay a lot of taxes to the government. A lot of taxes to the government. See, we people and all, how much we earn? Salpa we will earn. What? A little, very penny amount we'll earn. So, we'll pay only, say for example, 20% or 30% as income tax. Yes or no? A little, 20%, 30%, we will slab rates as there, or else, if you're earning, if you have a company or whatever, 25%, 30%, individuals and all slab rates. So all of this is there. But this person is who? Dinshaw Maneckjee Petit. Andre yarappa, tumba doddavaru, very big man. He used to earn crores, no? So obviously he was paying normal 25%, 30% tax. Illamma, very high ma, 45%, 50% on all. Example, okay, 45%, 50% tax. So if he earns 100 rupees, 50% to government only. Papa alva, hotte full uri. Yes or no? Meaning full burning inside. So what did he do? He came up with a plan. He came up with a plan. Yenappa planu? What is that plan? You know what he did? You know what he did? He split his income. See, whatever income he used to earn in the form of dividend and interest, what he did was, he formed few companies. He formed few companies, company A, company B, company C, company D. Okay, what these companies, why were these companies formed means, just shell companies, all these were shell companies. Ma'am, shell companies means they do not do any business. They are formed just to divert the income of some other person, just to evade taxes, just to evade taxes. Getting my point? No business in this company A. See, he formed so many companies here: company A, company B, company C, company D. Okay, all of these companies, they were not doing any business. Apart, what was the main intention of creating these companies were to transfer whatever the income he used to earn in the form of dividend and interest, no, from the shares he held in, as investment in other companies. So those shares were transferred to these company A, B, C, D, etc. Getting my point? Okay, ma'am. What happened? See, he transferred his investment. He transferred his shares as investment in these companies. He transferred all of the shares whichever he held in other companies, no, from which he used to get income or dividend or interest. He transferred it to these shell companies. Okay, now what happened? Think. Now what would have happened? All of before transferring the shares to this company, what used to happen? All of the income would be assessed to tax, in the name of Dinshaw Maneckjee Petit. In the name of Dinshaw Maneckjee Petit, where he had to pay super taxes. Meaning higher rate of taxes, along with surcharge, cess, ella serse, it was very high. So now what he did, because he transferred the shares, because he transferred the investment into these companies, these shell companies, what happened now was, the income from those shares, were assessed to tax in the name of these companies, So say for example, company had some shares, company B had some other shares. So company C had, say for example, Mr. Dinshaw Maneckjee Petit used to earn dividend and interest from say for example, just for your easy understanding, from TCS, from Infosys, okay, from Tata, say for example, Tata Motors, okay, all of, not actually these companies, but say for example, and Reliance, okay. So what did he do? What did Dinshaw Maneckjee Petit do? He transferred all of these shares to company A, company B, company C, and company D. So for example, company A, TCS, all shares of TCS were transferred. Infosys were transferred to company B. Tata Motors were transferred to company C. Then Reliance was transferred to what? Company D. Example, not it's not actual what happened, but it's just example. So now what happened? Whenever TCS paid dividend, whenever Infosys or Tata Motors, whenever it paid dividend, that dividend was assessed to tax in the name of these companies. Companies are different entity altogether, separate from its members. Now, who is the member of these companies? Company A, B, C. Who is a member? Obviously, Dinshaw Maneckjee Petit only, no? He purchased those shares. Getting my point? he transferred his shares of TCS, Infosys, etc., into these companies. Correct. And he purchased the shares of company A, B, C, and D in his name. Artha aita? Artha aita? Yes or no? See, he transferred his investment in TCS, Infosys, Tata Motors, Reliance to these companies, and he purchased the ownership of company A, B, C, and D. He purchased the ownership of A, B, C, and D. Getting it? Right? Basically, now who is the owner of A, B, C, and D? Mr. Dinshaw Maneckjee Petit. Getting it? Right? Okay, ma'am. Now what happened? Now the whatever the dividend income was assessed to tax in the name of company A, B, C, and D. Now this will pay normal rate of return, no, normal rate of income tax, say 25% or 30%. Getting it? So he saved that extra super taxes, super income tax, whatever it used to be charged in this particular person's name. Now he is not paying that additional income tax. Getting it? Getting it? The case law you understood? Yes. Now what would have happened? Now what would have happened? What did the court decide? Okay, now there might be one more doubt in your mind that, ma'am, okay, now the investment is there in this company A, B, C, and D. This person has purchased the ownership of these companies. Okay, we understand, ma'am, but the money is there in those companies, no, ma'am. How will he use that money, ma'am? It is there in the companies which he has, the shell companies. How will he use that money, ma'am? He wants that money. No, this is the basic question you'll all will have, right? So let me tell you what he did, what kind of brains he had, and how this is he took it from the company. I'll tell you. You know what he did? He took that money, whatever was received as dividend in company A, B, C, and D, as loan. He took it as loan. And you know what would happen? This loan, whatever he has taken, see here, they got dividend. This companies received dividend, say for example, of 50 crore amount as dividend. This was transferred to Mr. Dinshaw Maneckjee as loan. 50 crore loan from company A, B, C, and D. 50 crore. You know, this 50 crore was never repaid back to the companies. In the books of Dinshaw Maneckjee Petit, he took loans from company A, B, C, and D of rupees 50 crore. And this 50 crore will never be repaid back to the companies. Understood? It will not be repaid back to the companies. Now this whatever he got, no, this loan 50 crore, he will use it for his business or his personal expenditure or whatever as investment, etc., etc. He can use this 50 crore. Understood? Finally, what happened? The amount which he used to get as dividend or interest, he transferred it to the companies. It was assessed to tax in the name of the companies at lower rate of tax, and finally he took it back from those companies again to his account only, where again he used it for his purposes as loan. He took it from those companies as loan and he started using it for his business or personal purposes. Getting it? Understood? Right? Okay, now let's read what happened. Now let's read. You understood the case law. I'll just explain it to you once again so that it will be more clear for you all. See, there was this one person called Dinshaw Maneckjee Petit. This much you know. Yes, ma'am. This much you know. Dinshaw Maneckjee Petit. See, he was a very big industrialist, top industrialist. He used to earn crores of money. Okay. Apart from his regular business income, he also held investment in say for example TCS, so Infosys, so Tata Motors, so etc., etc. He held investments in those companies. Now what will happen? Those companies will pay him dividend. Those companies will pay Dinshaw Maneckjee Petit dividend. Now, because he is earning super profits, because he is earning too much of income, obviously he has to pay our income tax little higher than the normal people. Normal people, we will pay only 25%, 30%. But these very top people, no, they will pay 45%, 50% on their income. So if they earn 100, they have to pay rupees 45 or 50 to government. Getting it? So for that particular reason, what he did, he used his brains. He used his brains. What he did, he transferred all those investments, no, of TCS, Infosys, Tata Motors, all of this was there. No, he transferred that to shell companies. He formed companies. New companies were incorporated. Company A, Company B, Company C, Company D. These were incorporated, and the investment in TCS, Infosys, etc., were transferred to these shell companies. Now these shares of now this TCS, Infosys, etc., became the property of companies. Yes or no? Separate legal entity. Now that amount of income from dividend and interest was assessed to tax in the name of companies. Regular rate of taxes, normal rate of taxes, 25%, 30%. Getting it? For companies A, B, C, and D. Now this person, he saved a lot of taxes. Yes or no? Okay, now what did I tell you? Again, how he used to take that money back, the dividend, whatever he received in company A, B, C, how he used to take it back is, he used to take it back as loan. And that loan, it would remain, he would not repay it back. He would use it for his whatever for his purposes. Could be business purpose or personal purposes. Getting it? This much is clear. Now what happened? He avoided super tax. He avoided super tax by paying normal rate of tax by transferring the dividend income to the other shell companies. Getting it? Yes? Yes, ma'am. Okay, see, let's read now. Let's read now. Okay, what happened? What did the court say? See, the court decided that the private companies were a sham and the corporate will was lifted to decide the real owner of income. Now tell me, who is the real owner of income? Mr. Dinshaw Maneckjee only. No, he just formed those companies in order to avoid super tax. Or else, first also it used to come in his bank account only. Now it is going here and getting assessed to tax here and again coming to his bank account only. Now who is the real owner? He himself is the real owner. Yes or no? That is what the court is telling. The companies were created solely meaning only for that one particular purpose, to receive dividends and interest and hand them over to the assessee as pretended loans, as though it was a loan, which would never be repaid back to the companies. Sumne loan, never repaid, not repaid back. Pretended loan to avoid super tax, to basically avoid. What was the intention behind this? What was the intention behind creating these companies, transferring those shares and again taking back as loan? What was the intention behind all of this? Just to avoid super taxes, just for a loss to it. It is nothing but loss to the government. Yes or no? Yes. Okay, the court held that the company was not a genuine company. Very important. The court held that the company was not a genuine company and it was formed by the assessee just for tax evasion. See, when a company is formed, a shell company, you call them as shell companies. These are not genuine companies. Basically, there is no business involved in these companies. There are no transactions involved in these companies. It's just formed only for tax evasion. The main purpose of creating these companies are just to avoid taxes. Okay. See, the assessee was assessed to pay super tax. What happened? The court asked to pay super taxes for this particular person, that is Dinshaw Maneckjee Petit. Okay, deeming that the income of all the companies were the income of the assessee himself and that the loans provided to him were not genuine. Clear? Everyone, Dinshaw Maneckjee Petit. Okay, let's read now. Let's read whatever is there in your book. Okay, come to page number 460. See, in Dinshaw Maneckjee Petit, it was held that the company was not a genuine company. Important, was not a genuine company and at all, but merely the assessee himself disguised under the legal entity of a limited company. The assessee earned huge income by way of dividends and interest. So he opened some companies and purchased their shares in exchange of his income by way of dividend and interest. What did he do? He transferred the investment in those companies and he purchased the shares of company A, B, C and D. He became the owner of those shell companies. Okay, this income was transferred back. This income was transferred back to the assessee by way of loan, which was never repaid back to the companies. Getting it? The court decided that the private companies were a sham and the corporate veil was lifted to decide the real owner of the income. Getting it? The corporate veil was pierced, or it was lifted to determine the real owner of income. And finally, Mr. Dinshaw Maneckjee Petit was assessed to pay super taxes on those income. Getting it, children? Yes, everyone clear with this case law? Okay, very good. Okay, yeah.